Coming up on the option block, we break down the crazy week that has been. First pandemic fears, then Apple and Tesla blow the doors off. Tesla at 600? What? What's going on with those Tesla catastrophe puts? Spoiler alert, there's still quite a few of them open, and they're trading quite a bit. You'll never guess how much they're worth. They break down some unusual activity and answer your questions about a whole bunch of things, including what we think about this quote-unquote zero commission war going on in the options market, and a whole bunch more next on the option block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's MIXLR.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster GIOVINAZZI from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' bit of tunage means it is time once again to rock out with us, your friendly neighborhood option block all-stars. My name is Mark Longo from the old OptionsInsider.com, as well as, of course, from this fine network upon which you are listening to this program right now. Of course, join us live every Monday and Thursday, noon Central, 1 p.m. Eastern, after the fact, wherever you like to listen to your podcast. We don't judge. As long as you listen, send in those questions, those comments. If you like what you hear, leave a review on your platform of choice. It always helps new people continue to discover the program that has been marching on for some time here in the world of options. And joining me on the old panel today, let's see who we got. Who do we have? Let's go out first to the quiet hinterlands of these fine United States here, listeners. Quiet, tranquil place. Nothing bad happens. And that's where we are joined by Uncle Mike TOSAW from St. Charles Wealth Advisors. Uncle Mike, welcome back to the program from your blissful little haven there of St. Charles, sir.
Yeah, it's funny. You were talking about the hinterlands. I thought you were going to go to Andrew first, so it kind of threw me off a little bit. But I guess St. Charles can be considered hinterlands now as well. Good to know.
You know, I'm always here to throw curveballs to you guys. Once you get complacent, that's when I snatch the rug out from under your feet, and we all start all over again. That's what makes it fun. And then joining us also from a quiet little hamlet, sometimes in the hinterlands. These days, not so much. It's more of a compound these days. On the shores, the far eastern shores of these here United States, listeners, we are joined once again by the Rock Lobster himself, Mr. Andrew GIOVINAZZI from OptionPit.com by way of Carmen Line Capital. Mr. G, how go things in the land of the pit, sir?
Things go, we're going, it's going well. What can I say? Things are going okay. I think we have some things to talk about. With this market and bats and beers and just all sorts of stuff. But things are going okay. The ice rink is refrozen, so, life isn't terrible.
I think that's putting it mildly. We have some stuff to talk about, sir. So without further ado, let's get right into it with a little bit of the old trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we break down what the heck is trading, what is popping off out here on our screens, and what a crazy, tumultuous, topsy-turvy week it has been, listeners. It started off in the teeth of pandemic fears. We saw a lot of red on the old screens. Then we started, as the week evolved, started to have some numbers come out, particularly from some tech darling, shall we say, like Apple and the old Teslas and others. We saw a bit of a reversal of fortune. Uncle Mike looking like the guru that he is, telling everyone, get in there while you can and buy that dip. And it worked out pretty well. And it seemed like today was going to follow suit. We are kind of still living in the blush of those amazing earnings. We'll get to that in a little bit. But it seems like the market once again has turned, the worm has turned yet again. You know, these lingering concerns out of China every day. We hear more numbers of infected, more flights being cut, more different steps being taken by various governmental agencies to try to mitigate this, which to me is emboldening. It's heartening that, hey, everyone seems to be on top of it. We're hearing stories from the World Health Organization that a vaccine may not be too far away. And when you compare the rates of infection and indeed mortality to things like the common flu, this isn't that much more alarming, but still good to see that everyone is all hands on deck for this one. It seems like it's been a pretty robust response across the board, including large swaths of China being effectively shut down. We'll see how that plays out. Starting to hear some rumblings over there that folks aren't too happy with that either, which is understandable. So a lot to be played out here, and a lot of that being felt in the market today as the bull, it seemed for a while not even a pandemic could derail the bull, getting a little bit of its horns clipped today. Most of the major indices back in the red, and pretty firmly so. S&P, the Goldilocks, right around 0.75% to the downside. The Dow down about 0.2%. The NASDAQ leading the charts to the downside, down about 0.8%. Gold, of course, getting a lift. Still can't make that 1,600 level, 1,583 right now. We'll get to more of that in a little bit on TWIFO. Also, WTI just continuing to just take a drubbing down to 51.8, shy of the 52 handles, north of 60, not too long ago, listeners. So all of you who've been saying, why are people fading the call skew in WTI options so aggressively? A frequent talking point of our TWIFO program. In fact, we'll have our old friend Adam Webb from an oil market maker out there joining us on TWIFO a little bit later today to discuss just that and a lot more, what's going on out there in those crazy markets. But right now, WTI back shy of the 52 handle. And our old friend, ye old VIX cash, continues to get a lift. It was at about a 1730 coming into the start of the show, which puts it up about actually down slightly from where it was last show. But now it has gained even more momentum since then. It's up about another half a handle from this, about a 1780 or so, which puts it up about a third of a point from where it was this time last show. So volatility remains frothy, remains strong. All of us who were kind of fading it to end the week on our vol views predictions, looking like another week where that's going to be a challenge. VVIX, a.k.a. the volatility of volatility, also up to 101.5. That's up, actually, I'm sorry, that is down actually a little bit from last show, which is surprising, down about 3.5 from where we were this time last show. So we were even more inflated last show. And our old friend VXX coming into showtime, not exactly feeling the love. Actually, about a 1560. So that puts it up about a third of a point from where it was this time last show. So VXX having the temerity to actually go up in January. How dare it? But a lot has been popping off this week to kind of mix this narrative. Of course, we saw Tesla and Apple both blowing the doors off this week. An article coming out here on CNBC talking about how short sellers lost more than $1 billion in a single day as both stocks skyrocketing here on earnings. Right now, Apple actually selling off a little bit, down about 4 handles to about 320 and change. Tesla, I mean, you can't even say this almost with a straight face, 646, up 65 handles. We're $220 past the 420 takeout level that Musk got in so much trouble for hinting at a year or so ago. So, just how the worm has turned out there. And it's so far away. Mr. Rock Lobster, it seems like just a few days ago we were talking about the Tesla par puts and indeed the Tesla 10 puts. Those seem to be a distant memory now, do they not, sir?
Isn't it just, and the funny thing, remember, they went to $3. Don't forget that either. There was that vol You know what's funny is the vol's so high in Tesla, they still might be $3. I gotta look.
That's a good point. I haven't pulled them up in a little bit. Maybe I'll do that while you regale us with what is trading.
So, as far as it's an amazing stock. It's what happens when there's short interest and people need to buy it back. They keep, it's impossible to say is it overvalued, undervalued, whatever. All I know is it's trading $645, and I don't think anybody really wants to get in the way of it anymore. I got to be honest. Now, I wouldn't be surprised if Mr. Musk took the fact that it's $645 and sold another, I don't know, couple million shares. Why not? Why not sell 10 million shares here? That usually is his MO, and I would think that would solve his cash problems for a very long time. So, and I'm sure he could find buyers even down to 540 now. So it wouldn't be surprise me if I saw that coming out because that's what he does. But it's what it is. I've had most of my clients actually were kind of bullish. They would sell out on money puts and stuff like that. I just cautioned everybody about if you want to fade the downside, that's fine, but do it in some sort of protected way, not just shorting calls in it or anything like that. So I think the pit crazies have avoided any kind of Tesla disaster, for at least as far as I know. But right now, the next thing I guess is VIX and volatility, and you know what? It's just like it's one of those curves. I tweeted out Steve Place. He's actually another good guy to have on the show. I tweeted out something from him on. What the Ebola virus looked like. Remember the Ebola thing? We just had that crater, right? Just as a reminder, and I don't think the difference between this, disease or whatever is it seems like it spreads faster, although it's not near as lethal as of right now, which is good. But the Ebola thing was so nasty, everybody was freaking out about it. And in 26 days, it was a 26-day time frame, the market lost almost 10% in 26 days on that whole whatever. And it literally rebounded off onto new highs again. That was in 2014, I believe. So, and it's what's happening is vol's going up because there's some uncertainty and you should expect volatility to go up. So, when we talked last week, I think VIX was 17 or something. I thought it was fairly priced. And I think the VIX right now at 18, almost 18 is fairly priced. It's just, it looks like you pretty much can move at least 1% a day pretty easily. Everybody that didn't get in on this lower price in SPX, like, and then the market rips up again if everything's all cool. So, to me, this is like a short-term caution. It's like a short-term caution deal, I think it's, and see what happens. But as far as the term structure and VIX, as an indicator, it's extremely flat. And it hasn't really gotten, what do you call massively backward, meaning that Feb future and the cash is not like pointing straight to the sky. It's been it's been kind of what I would call like a measured sell-off. And then sort of that's where it is. I think the really worst performers are oil. Like ExxonMobil's in the low 60s. It's almost like nobody wants oil or gas-related products again. Exxon started going down after when Davos started, and it really never has recovered. I mean, I think it was $71. So that stock is down almost $8 in 2 weeks, which is a pretty big move for that company. It's not like it's a growth stock anymore, and it's yielding 5%. Actually, it's more than 5% now. So I mean, I assume somebody's going to want that at some price, but I think it's gone down every single day for almost 2 weeks. So the oil is another thing to look at. And, I guess for me, that wraps it up. I'm anxious to hear what the perennial bull has to say about this.
Before we get to that, Mr. Uncle Mike, Mr. Rock Lobster, you invoked these, so now they must be discussed. You talked about our old friends, the Tesla catastrophe puts. I haven't talked about these in a while, a.k.a. the par puts, the 100 puts, even the 10 puts were pretty active there for a while. And looking at these right now, these are active again today. Not quite the size maybe we used to see, because we are 500 handles and change away from this now. But still, they're trading today. 20 lots, 10 lots. These things are trading. The par puts, there are, looks like, about 19,000 open. So a far cry from when it was the number one open interest strike out there in Tesla land. I'll have to go look right now and see what that is. But I'm going to put you on the spot a little bit, Mr. Rock Lobster. It's somewhat unfair, but you kind of mentioned it with where the vol is, what these things could be traded for. Guess what a freaking par put Jan 2021 in Tesla is going for right now?
A year from now?
Yes, a year from now.
I'm going to say 85 cents.
That's not bad. That's not bad at all. It's actually $1.25, even richer. $1. These things are trading for $1.25 as we speak. 20 lots, 10 lots going up. $1.25. I mean, at the height of the madness when Tesla was selling off and we saw that Vega effect kicking in, these puts were trading about $3.50, somewhere around there, $3.30, something like that. So roughly not quite 3x where they are right now. So substantially more, but still, these are still trading about a third of that value. Granted, there's a year to go, so you got some time in there, but a third of that value right now at 600 and change? Wow, that's interesting. Let me just put it that way. If you are inclined to harvest some premium in Tesla, I got a feeling where people are going to be looking after this one. Not as much risk from the 100 strike as there is from, say, where the 300 strike, where everyone used to write in and sell, or now you could do it from the 500 strike, for God's sakes. The par strike, $1.25 right now, 19,000 open up there, and they're trading pretty actively as we speak. Listen, since we're talking what the heck is going on in this maddest of names, let's look really quickly. What is the most Take a guess. Take a guess what the biggest open position is in Tesla right now, Mr. Mike. You can play along too. Both of you take a guess.
All right, I'll go stupid and say the 1,000 calls.
Interesting. Uncle Mike, what is your guess on the number one open position in Tesla right now?
500 puts.
Both. Well, one of those is reasonable. One of those is outlandish. But not quite as outlandish as what the actual answer is. Remember I just said the Jan puts, there's only 19,000 in Jan? That's because there's 67,000 on in February. The Feb par put is by far and away the number one size options position. It's been a while since we've checked in on Tesla. It is not quite 3x, actually pretty close to it, of what the number two position is, which is the comparatively far more level-headed June 250 put. 24,000 of those. 22,000 of the Jan 2021 380 puts. And then number four, we got the June 50 put. 21,000 of those, and then 20,000 of the Feb 75 puts. So in the top five, there are two Feb puts that I gotta wager are probably not going to go out. If we hit par by February expiration, a lot will have happened in the land of Tesla. So yeah, the catastrophe puts are apparently alive and well and open for size still. Nearly 70,000 in February. They never played that close to home. They always played Jan, and they rolled them out again till probably another year out or so. They didn't usually play month to month. Sounds like they're doing that now. It'll be interesting to see if someone rolls these Febs out to March and keeps that par level alive. Mr. Uncle Mike, we can go down this rabbit hole for days, but what is lighting up your tape over there in the tranquil hamlet of St. Charles?
In the tranquil hamlet. Well, a little bit to add to Tesla. So this is sometimes my indicators of when people that typically aren't market participants start telling me about stocks. So we went and got new appliances about a month ago, and the appliance salesman was telling me about how great of a stock Tesla was and how it'll never go down, and he loved Tesla. And so typically when people tell me things like that, it's usually a bearish indicator. Now, it was bullish. It went up since he's told me that, but I can't help but think that whenever we get to points like that, it just makes me think that we might be towards the top. So there's my refrigerator salesman indicator right there for you. Take it as you will. So in terms of what's lighting up my tape today, I think that with the worldwide pandemic, with GDP not moving like we thought it would, with the Fed pausing rates and doing who knows what with that, and with everything that we have, the market still doesn't have direction yet. And so it's like we're just kind of, there's an old saying, buy the dump, sell the hump, don't diddle in the middle. And we're kind of diddling in the middle right now in a lot of ways. And we're still ahead for the year, roughly 1.5% on the S&P, but we're still below the all-time highs. And to say that this is a scary bear market right now, I think would be ludicrous, just because of the fact that we're just a few percentage points off the all-time high. We're pretty much right back to where we were on Monday when I was saying these same things, so to speak. One thing that I like about this market right now is that we do have the luxury of higher volatility in terms of higher option prices. So if you have the capital wherewithal to do so, if you have the risk management wherewithal to do so, perhaps selling options on days like today, if you are bullish on a day like today, might not be a bad idea. And by selling options, I'm of course referring to selling puts or put spreads. Reason being is that if you are a bull and you want to get in and buy the dip, one of the beneficial things of a market like this is that you can sell puts or put spreads further away from the current underlying price than you could in a market where the VIX is at 10. And so we have a VIX that's right around the high 17s, low 18 level right now. You have the ability with which to do so. The other benefit of a higher VIX like we have right now is that if you're buying options and you're long calls, let's say, and the market went down on you, the higher VIX kind of helps you a little bit. Now, of course, you're still going to be losing money. I'm sure it's possible. It is possible for Vega to out Trump Delta, but it doesn't happen that often. But it does. I have seen it happen. But with the VIX going higher as the market's going lower, that does help you a little bit in your long options. So if you can be very nimble, markets like this can be very exciting. But if you're not a very nimble trader, then markets like this, I think I said about a year and a half ago, are for crazy people. I don't know if we're quite at the crazy people market yet. In fact, we're nowhere near crazy people market yet. But in the near term, just understand who you are and what you do. If I were a day trader, I would be foaming at the mouth to trade in a market like this, just because of the fact that we get a lot of movement throughout the day. If I have tight stop losses on, then a move against me won't hurt me that badly, but a move in my favor will help me tremendously. I'm not a day trader, so it's not really my market. But the point is that make sure that you have the right risk management in place. Now, a couple other things that I'm looking at, or one other thing that I'm looking at right now is silver. Silver is kind of going all over the map at this stage. The fact that we're still kind of in the high 16s right now, we haven't blown the doors off of anything, and silver hasn't made a run at 20 by any means. And I really believe that if the world were concerned about some type of pandemic, or the world were very concerned about impeachment, or the world were very concerned about what's going on with Baghdad, then I don't think we'd have silver at these levels. I think they'd be much higher, quite frankly. So it's with all that in mind that I'm still sticking to my guns and being the ultimate all-time bull of this show and saying that I think we're just kind of in a little bit of a pullback. And even if we go down another 100, 200 points in the S&P, I'd still say the same thing because we're very close to the all-time highs, even if we were to go down further. If you're in levered option positions and put spreads and long calls and things like that, you got to be careful. You got to be short-term cautious. If you're not short-term cautious, you can't trade. You're going to get pounded at some stage. So those are my words of wisdom, and that is what's lighting up my tape today. The last show in January. Holy cow, it's going to be February already.
Yeah, we're already cranking through January, almost 1/12 of the year under our belts here. Crazy. New decade, new year, all sorts of madness. Pandemics, Tesla 600, dogs and cats living together. mass hysteria. Let's see what all this mass hysteria has wrought on the markets. An active day, if not quite a blow-the-doors-off day. VIX coming into, as of a few minutes ago, not quite at 250,000 contracts, at about 233,000 contracts. The ADV right around 400K out there. SPY not quite at 2 million, at about 1.8 million. The ADV is right around 3 million out there. The S doing about 660,000 contracts. The ADV a little bit north of a million, about 1.25 million. The Qs 560 as of a few minutes ago. The ADV a little bit shy of 700K out there. And the Russell, aka IWM, at about 240,000. The ADV about 340,000. So none of these names really at their ADV yet, or even really threatening them here coming into partway through the day. Probably hit them maybe by the end of the day. We'll see. VIX kind of surprisingly languid given the fact that what's going on out here in the broad market. Maybe the fact that the warm is turning a little bit to the downside will drive some more paper out there. Let's look to what's driving individual name paper out here. We have a lot of it. It only cost you $1.20 to break into the top 10 today. That's your old friend Luckin Coffee out there. Luckin Coffee out of China. Go figure why they're trading today. About 120,000 contracts on the tape. Number 9, Baba. Also go figure what's going on out there. 138,000 there. Then we start cranking up the size pretty quickly. Number 8, Micron, 142,000. Number 7, AT&T, 203,000 contracts. Number 6, good old GE, back in the top 10, 204,000 contracts there. Number 5, AMD, perennial top 10er indeed, top 5er, back in the top 5, 262,000 contracts. Then we jump up quite a bit to number 4, Microsoft, 508,000 contracts on the tape. That tells you what kind of a day it is when 508K doesn't even get you to number 1, and it gets you to merely number 4 out here. These tech names are lighting up the tape today. Number 3, Facebook. Facebook not exactly having perhaps the big move that the Tesla folks were enjoying out there. Right now it's off 14 handles right around 209, and it kind of fell off a cliff going into their earnings. They were at 223, and they opened up the next morning at 206. So a pretty strong sell-off there. By the way, check out all the earnings move. The earnings move results reports are starting to come in for these big names. I don't have all of them yet, so I haven't parsed them here on the show. But head on over to theoptionsinsider.com. You can, of course, get all those earnings move. You can see exactly what the market was pricing in going into some of these big movements. Maybe we'll get to that in a second. But first, Facebook right now, 520,000 contracts on the tape. Number 2, Apple, 642,000. And that's not even number 1, listeners. So I think you can guess what number 1 is. Yes, Tesla closing in on 700K. That's the most we've seen on our top 10 in single names for quite some time. 683,000 contracts. This is just index is not blowing the doors off, but the single names definitely lighting up. This is where we get a little bit of that difference between macro and micro during earnings season, listeners, which can be fascinating. The most biased paper looks like it's Micron, with 80% of that paper coming on the call side of the ledger. Looking coffee, though, folks, not liking it out there. 67% on the put side, 55% for Baba. Go figure, puts leading the dance out there. Today, after the bell, we have more names popping off. We have Amazon, we have Visa, Levi's, Amgen. Tomorrow, Caterpillar, Exxon, Honeywell, a lot of big names still got to go just this week. So it's been a pretty hot week for earnings. Facebook, of course, wiping out about 8%, or as people like to term it in market value, about $50 billion from their market cap. I'm looking at some of the earnings move results reports we have here. This is from the last week. This one, I'm looking to see if we have any names here that are popping off here this week really quickly. Facebook was pricing in $9.50. Looks like they drop about $17 at one point here. So a little bit of underpricing here from a overall price. Yeah, they dropped about $17 in the initial blush after earnings. So that was a wee bit undervalued. Let's look out here and see any other names were lighting it up out here very quickly. We got PayPal here. So many tickers, listeners, to scroll through. Don't see Apple, or at least not for a results report here yet, listeners. But there's a lot of names, a lot of tickers. Head on over to theoptionsinsider.com and click away to your heart's content. You can't beat the price. It's free. Meanwhile, we're going to keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, let's get weird, let's get wild. Let's see what's lighting it up on an already pretty wild day out there in the market. I know you're thinking pandemics, you're thinking sell-offs, you're thinking tech wrecks and tech rallies. Of course, what next comes out of your mouth is Mo, a.k.a. Altria Group, the former widely condemned Philip Morris. So bad they had to change their name. Now Altria, ticker symbol, of course, Mo, M-O. Trading today right now, 47.14, puts it off about $3, so not a great day here for good old Mo. A year ago, they were not that far from where they are right now. They were at about 47.80, so pretty much unched. And then they had a nice rally up to about almost $58. That was back in April. And they kind of slowly but surely sold off back again to their nadir. Looks like it was around 39 and change back in September and hovered there for a while. So kind of a topsy-turvy year for them. They rallied, then they sold off hard. So they were up on the year for a while, then they were down on the year for a while. And now we come back to pretty much where they are, which is unched. They were up a little bit. They're up to about $50. Looks like they just sold off about $3 as of today, actually, 6%. So I'm guessing earnings not looking too good. Maybe a little bit of pandemic fears mixed in there as well. Maybe that's dampening tobacco demand. Who knows? Either way, there is some heavy tobacco use over there in China, that's for sure. But interesting stuff here. Either way, off $3. So pretty much a wasted year for good old Mo here. Let's see what our Eye of Sauron revealed to us. Oh, this is interesting, Mr. Rock Lobster. Haven't seen one of these in some time in the op. This actually brings me back to my good old days in Intel when there'd be some crazy nonsense in the book right around expiration. I think I've told this story before, but people hitting crazy bids for cabinet, which is literally the cheapest thing you could print things for on the CBO back then when things traded in teenies and eighths, listeners. And thousands of these things for effectively a penny. And the amount of risk that was involved in that was madness. Seems like we got something similar going up here, Mr. Rock Lobster, although not quite for a penny. Looks like a little bit of last-minute premium harvesting in good old Mo to the tune of the Jan 31st, so these are weeklies expiring tomorrow. 48 calls. So I mentioned we're at 47.11 right now. We broke through the strike to the downside. Someone deciding, hey, there's a bid still there. I want to hit it, and I want to do it for size. 9,158 of them going up for 32.1 cents. That's about 2 cents below the bid. This is opening, which is interesting. My first blush was this was some guy getting the heck out of Dodge. This is closing. No, this was opening. Our Eye of Sauron probably wouldn't bring it to us if it was not. And total of about 12,000 on the day. So Mr. Rock Lobster, looks like someone's trying to gobble themselves up a little bit of money to the tune of 32 cents, 12,000 times. What's your take here on someone doing a bit of a high-risk maneuver? This stock could easily reverse out there, but it is it's not exactly chunk change. We're talking, about $3.8 million worth of premium. What's your take on this one, Mr. Rock Lobster? A little bit of high risk playing with fire here.
Now, don't you think somebody owns some Altria and they're just whacking it out? They're selling calls. They own some stock. Because I think they just have to write down a bunch of their jewel investment or a big chunk of it. It's one of those things where I think they're long it. They probably took a little pipe today in the stock. And they're going to sell it. That's how I look at that one.
That's not fun at all. I like my version better, where someone's just crushing the bid and just playing with fire all the way and just sweating from now until expiration. Isn't my version more fun?
Yeah, I mean, you definitely have, because you are a radio show host personality, so you automatically are going to use, that very colorful, flowery language around a call sale.
That's why I get the big cheer, sir.
They're whacking them out at the end of the day.
He's popping tums.
He's
popping tums. He's sweating as we speak. Will he make it? We'll see. Tune in tomorrow. Live update.
I do like that. I think that somebody just, they're probably a holder. They're like, oh, hey, there's a bid for these things. What the heck? It's free money. Right? It's 30-something cents that they weren't going to have because the stock's trading 47.
Yeah, they're already wearing it to the tune of like $3 today. So on the underlying, so they'll take 30 cents back on $3. I like my version a lot better, but it does make sense either way. Someone maybe just crushing a bid, or someone's got some stock looking to get anything they can out of it here and get while the getting's good. And if it goes back up to 48, well, they're getting the heck out of Dodge here. Let's move on to our next name. Tell you, I don't think we have to watch these. I think there's probably a good chance that they're going to go out worthless. Maybe just for fun. Just for fun. We'll watch. We'll come back to them next week and see how they fared. I got a feeling that guy's keeping that 32.1 cents. But hey, crazier things have happened. Let's look out here to our next name. If Mo wasn't lighting it up for you, big sell-off day, Apple and Tesla is moving, VIX is moving. You know what you're thinking next. You're thinking Jobble Inc. Yep, Jobble. Ticker symbol JBL. You might be confused with that, but thinking it's JetBlue. No, it's not. It's Jobble. This is an American worldwide manufacturing services company. I love these. I love these descriptions that tell you precious little about what the firm actually does. This one is trading $39.73, off about $1.25 today, or a little over 3%. This has been an interesting year for Jobble. A year ago, they were trading $26.25, so they're upsize from there, and they're pretty much at the upper end of that range right now. So a year ago was around their 52-week low, and this is pretty much right around there. Actually, they were a little bit higher. They were trading 44, so they've given a little bit of that back over the course of the past week, but still at the upper end of that 52-week range. So let's see what our Eye of Sauron has in store for. I got a feeling it's probably calls, but you never. Oh no, it's not. It is put love to the tune of some. Also a lot of near-term paper here. These are once again January expiring tomorrow. Everyone loves January 31st weeklies today, to the tune of 5,500 of these Jan 40 puts going up for similar prices, Mr. Rock Lobster, 32.5 cents. Oh, the old days of 16ths and 8ths. Brings back a warm fuzzy to me. 32.5 cents here. Let's see. These are obviously opening. Total of about 6,500 on the day. By the way, a total of about 12,000. I think I mentioned that before on those Mo calls earlier. Excuse me. So someone gobbling up. These things were 25 cents at 35, so not quite lifting the offer, but coming pretty close here on these opening Jan 40 puts. These are in the money puts now, which is also interesting in and of itself. So someone may be thinking the bloom is off the rose here and deciding to stop themselves out around the 32, around the 40 level, excuse me. Interesting stuff. Mr. Rock Lobster, a lot of near-term paper going up today, which is not what I expected. What's your take on someone gobbling up some protection for a day on the 40 strike here, sir?
It's one of those things. It's like it's a cheap shot, right? Cheap shot. There's some nervousness. We're going to have one more overnight. We haven't, the overnights this week overall have not been great. Like the weekend was rough, right? We did have that one little bounce on, Tuesday. And then yesterday we were kind of softer. So I think just, somebody's looking for some really cheap leverage. I mean, puts for 30-something cents. I mean, it's easy for Jabil to be down $1 tomorrow. Those things are going to triple in value. I mean, it's not, we had some kind of goofy opening. There's no liquidity and they have some money there. They put a bid in for $39 and, they make some money. So, that type of trade doesn't surprise me right now. I've been doing some things like 2 weeks ago, like right in the middle of the Davos thing, I started selling put spreads in like Exxon and XOP and stuff like that. And, I'm totally wrong. And after 3 days, I'm like, I'm going to get killed. So I started buying just the weekly at the money puts, 1-to-1 against the put spread. So I totally flipped my delta around. But they weren't very expensive, and it's just right now I've just been rolling them down, and it's saved. At least now it's actually making money. But it was a disaster. So you don't know what they have against this position, but there's a lot of there's a lot of gamma in these options right now. And, the overnight could be just about anything. We don't know. And I think that's why it is the flavor of the day, so to speak.
I love how you instantly assume that the calls are against stock, but the puts, this is some guy specking to the downside. I love how your brain works sometimes. I go the other way. I assume the puts are usually against stock. The calls probably, but you never know. Maybe a bit of a high flyer, playing with the fire there. But interesting stuff here, JBL. So tell you what, since these are so near term, we'll come back to these bad boys too really quickly. These will be easy to pay off. We'll probably do them as a twofer next week, Mr. Rock Lobster. So we'll see who is correct on these bad boys as we wind it out with a name more of you have probably heard of. Been making some headlines of late in the brokerage space. This is Schwab, soon to be Schwab TD monstrosity, whatever the heck that thing's going to be as a result. But right now it's still Charles Schwab, ticker symbol SCHW, trading today 46.67. Get a nice lift, up about 3/4 here. So coronavirus, macro concerns not weighing on Schwabi here. Let's see what's been up here for them. Actually, it's been almost literally a lost year for them. A year ago, they were trading 46.87, so 20 cents more than where they are right now. And over the course of the year, they kind of drifted lower. They got down to 36 in August, and they rallied back up again to 44, and then sold right back down again to 35 again. Right around their 52-week low was 34.5. That was in October of last year. So they had a brief blip. Seemed like they couldn't sustain it. Then they turned it around again, probably not that far away from when they started talking about all this madness in the space about zero commissions and then, of course, the takeover. And they turned it around. The stock was on a nice tier from there, from about 34.5 all the way up to about 51. That's where it topped out there back in middle of December before drifting off again back to where it is right now, 46.66. So pretty much almost exactly a wasted year in Schwab land. So let's see what our Eye of Sauron dug up for us today in Schwab. No, I'm going to disappoint you, Mr. Rock Lobster. No last-minute calls or puts going out tomorrow here. We're going out all the way to March. Can you believe it? The March 47's going up for $1.40. That's pretty much on the bid. 5,419 times in one big print on the Philly. Total of about 16,000. So someone has an axe to grind here on this 47 strike. That's kind of interesting because, as I mentioned, that's pretty much dead money paper, right? That's pretty much even on the year paper, and someone's deciding to overwrite that strike for size here right now. Total of 16,000. Again, we obviously have a corporate action in this name, so that's maybe playing with this as well. I don't remember exactly what the price levels were, how that's going to play out for Schwab as they continue to gobble up and become one of the largest brokers on the planet. So that's probably driving some of this. Someone thinking that number is not going to settle out above 47 here. But either way, Mr. Rock Lobster, comparatively meaty at the money call going up for size here in March in Schwab. What's your take here, sir?
This is an interesting one. I'm going to say buy right looking type of action. And I think for that very reason you just said, I mean, they chop commissions. It's nice looking at statements that don't have any $5 ticket charges on them, or $2 ticket charges, or $1 ticket charges anymore. So it was one of the few gifts. I mean, I'm sure they're going to take it back somewhere else. I think that's also the fact that stuff like Robinhood and Doe and some of these other apps, these trading apps, where you can just do stuff for free, basically. It's a real challenge, especially to get millennial dollars. So, because eventually they want those small 401ks to become big 401ks. I mean, that's the business that they're in, really, ultimately. So they've got to, come up with a little bit of a loss leader there on the front end, and payment for order flow doesn't hurt either. So it helps the customer really get saves them money. However, it also makes the Schwab growth prospect not as good. I don't think it's going to just take a little while for them to figure all that out. How to make those revenues back. But But again, I just think this is just a buy right. Make a couple of bucks. The earnings are out, and see what happens. So, it just feels like a buy right. That's all. Not a bad yield, really.
Not bad at all. I think we'll skip putting this one in the to be watched category here because we got a lot of listeners we want to get to here. It is Thursday after all, so without further ado, let's get to the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. You guys know how to get at us. A lot of you on social media or via the website form or via our app or sometimes in the live chat as well. If you want to get at us, there a lot of you chiming in there of late. I like to favor you guys, so I'll get you guys in there first. Let's see. A bunch of people chiming in. We got Tony Weber taking me to task for my pronunciation. I said before Jobble. He said Jobble is a tech name and it's actually pronounced J-Bill. And they supply some technology for defense. Well, I think you should go, Tony, and rewrite their description here on Google because they just call them a manufacturing services company headquartered in St. Petersburg. Your description was far more useful, so you should go maybe fix that for them over there. Maybe they're a defense contractor. Maybe they want to be under the radar. But okay, J-Bill, and they're a defense name. Noted for next time. If we go back to did I say we're going back to those ones? Yeah, I did. So it will be J-Bill. I will mark that in my notes. There we go. I love our listeners. Very keen-eared. Edward Elsewhere chiming in on the live stream saying, love your podcast with a thumbs up. Well, right back at you, Edward, and everyone else out there who takes the time to write in and listen and subscribe and leave us reviews in your platform of choice. We love all you guys. You guys are quite literally the reason that we do this and have been doing this for 13 freaking years. Can you believe it? January 2007. Just had our 13th anniversary. I love when LinkedIn notifies you these things. Everyone starts hitting you up with anniversary notices. But 13 years, it's kicking off our 14th year here. How terrifying is that? Pre-iTunes, really. Certainly pre-Apple Podcasts, pre-iPhone. We were way early on. You had to have an RSS reader to get this stuff back in the days. Listen, that's how early we were. So when we say we are the home of the Options Podcast, we mean it. We really kicked off this whole thing here. All right, next up. John, before we get to that one, we got more live people. Got Bitcoin. He was in the chat last week. He was listening to Uncle Mike's talk about premium and what to do with extrinsic value. And he had sent in some questions. We didn't get a chance to get to him last show. He said, first off, premium sucks. I don't know what to make of that. If you're selling it, it's not the worst thing. I guess if you're buying it, yeah, it's kind of hard to buy. So maybe if you're on the long premium side, I can understand that. But then he follows up with, so he's a premium seller, so he should like premium. He says, how do you sell calls without getting margin called? All right, Uncle Mike, since you were the one doing the strategy block on Monday, that's what prompted this. I'll let you have at it. What do you have to say here for Got Bitcoin? I touched on some of this on our crypto show this past Monday, but I'll let Uncle Mike have at it here. What are some of your techniques for selling calls without getting margin called, sir?
I can't even remember the last time I've had a margin call for anything that I've traded, quite frankly. I think that if you're going to sell calls, you can do them while you're cash secured, meaning buy the underlying at the same time while selling it. I understand if you're doing it on Bitcoin, if you're doing it in the futures world, sometimes that may not be a choice, but and you still could theoretically get a margin call. But the only way that you can truly guard against a margin call is to have another call on top of it and have the money and be secured. So if you're not cash secured, you're always going to be at risk for a margin call no matter what, just because of the fact that the market can go against you. So if you're selling a naked call, market goes higher, and you hit the levels with which the margin department doesn't want you to be in that call anymore, you're going to get them. If you buy stock on margin and you sell calls against it, and the stock goes lower, then you're going to get a margin call. So no matter what you do, the only way to avoid getting a margin call is to just simply trade in a way with which you can, you're not levered in some way, shape, or form. So that's not my style of trading. So if you want to avoid margin calls, don't trade on margin.
Yeah, and just don't go out blasting bids naked on calls. We've advocated many times on the show. Do spreads. That's going to mitigate a lot of that risk right there. So your brokers, instead of, remember, you're selling calls. It's effective like you're selling short the stock, right? There's unlimited risk to the upside. Put a nice spread on there. It'll cap your risk. It'll make your broker happy. They won't charge you an arm and a leg for more. They'll only tie up what is required for the risk for that spread. That's kind of the most basic way to mitigate your risk on a lot of these. Sounds like you've had some problems selling naked calls in the past. I'm just going to read between the lines there. So a spread. I know it's hard to buy that other leg. You're wasting money, blah, blah, blah. I know. But in the long run, I think you're going to thank us for that. All right, let's see here. Got a bunch of good ones here. Timoj wants to know, what's a good strategy for when there's an earnings blowout like Apple or Tesla this week? Well, buy the freaking straddle. There we go. That's a good way to go. When it's $9, I think whatever it was in what name was that? Yeah, it was Facebook was $9 and it moved 17. That's a good buy. It's pretty easy. We've talked about many times about earnings strategies. I don't want to spend too much time on that because I want this next one's kind of interesting. Bit of a thought question here. Friendster wants to know. Old school. Wasn't that Friendster? Wasn't that old? Is that like the early Facebook? Or am I thinking of something else? But either way, Friendster wants to know, do you think the whole move to zero commissions has been good for options traders? This is an interesting one, bit of a contentious issue. First, let me clarify one thing, Friendster. Obviously, if you've traded options recently, you know it's not zero commissions. It's no ticket charges anymore. But most of the major brokerage firms seem to have settled out around 65 cents per contract. So I think at first blush, paying less for customers, obviously people think that's a good thing. But there are going to be some tangential impacts, and certainly from cutting off the commissions for the Delta One type stuff, the stocks, the ETFs, you're going to see your broker is going to have a lot less resources to throw around and to do stuff going forward. Case in point, we are a little bit lighter here on the old All-Star panel right now, and that's due in no small part to the fact that the brokerage firms have to tighten their belts. They have no budgets for anything anymore because the zero commissions is squeezing a lot of them out there. So I just use that as an example of maybe things you've come to expect from your broker, maybe more attentive customer service, better R&D on the platform. Things that are expenses may start to be delayed or fall by the wayside as a result of this kind of general belt tightening that everyone's doing. Schwab did this Machiavellian move to try to cut TD off at the knees so they could scoop them up for a lower price, and it certainly worked. But we're starting to see interesting ramifications of that. Also, the jury's still out on execution quality in this new world here of quote-unquote zero commissions. Also, when they're not charging you, they're relying more on payment for order flow, which is not quite a transparent process. And I'd much rather have the payments and the revenue streams be open and honest and transparent and visible than some kind of backroom dealings that we're seeing on the payment side. So at first blush, it's a positive thing, but there are some, I think, dubious things floating around under the surface on this. Mr. Rock Lobster, what do you say here for Friendster? Yay or nay on the whole zero commission things for options traders?
I think overall it's better. You can get some crazy good deals. I'm trading like for a fixed price, very low fixed price per month using TradeHawk and Tradier, like $40 a month with no ticket charges and no commissions. So you can get great deals. I think overall it's good. I think all order flow is shopped anyway. So nothing has changed from the customer point of view, in my opinion, from the day before they cut commissions to zero to after. Like all order flow pretty much was shown, payment to order flow. You're getting the NBBO or better on almost every fill. The only problem sometimes is they can hang a little bit. The fills can hang a little bit. You're like, why aren't I filled yet? So that problem, because people now are so used to having the systems go, but you got to remember there's 15 different exchanges or something, right? And, there's a bid on one exchange and a bid on the other that comes into the consolidated book. So, but overall, I think it's for the average customer that trades, 20, 30 contracts a week. I think it's great.
But you mentioned the Tradier all-you-can-eat model. They offered that before this quote-unquote move to zero commission. So I think they're probably coming under some pressure of this. Will they be able to continue offering that if most of the major brokerages are now offering much lower commissions. That could be an unintended consequence, as well. We could see maybe impacts with disruptive firms like Trader as a result. So there are still, I think, some shoes left to drop here. Mr. Uncle Mike, what are your thoughts here for Friendster on this whole quote-unquote zero commissions things and options?
I think overall it's better. I mean, I have a view as both an institutional trader and as a retail trader, and that I'm kind of a little bit of both. As an institutional trader, whenever I'm putting out a large lot, I will say this, and I only do that on SPY options typically. The fills do seem to take an extra second or two. Not a lot, but it does seem to take a little bit longer. But it's SPY, and do I feel that I'm getting gypped on the fill? They're penny spreads. So I don't really feel that that's an issue with SPY, at least from my vantage point. The thing I like about it is also just as an investment advisor for clients that are putting in $1,000, $2,000, or whatever dollars per month. I can buy individual stocks. I can buy ETFs. I don't have to go to commission-free ETFs. I mean, there's a lot more things that I can do now that I was not able to do before. Is it better for option traders? I think in the long run it will be, just because the downside of it, Mark, like you said, you don't have as much transparency, but the upside of it, you kind of can get a little bit more transparency in selection of broker. And that, let's say that brokers start charging fees and doing things like what airlines do. You can then pick the broker that charges as few fees for you, and it could ultimately benefit the retail option trader overall. So I think it'll ultimately be a benefit. There's some things like what you mentioned, Mark, that you have to be prepared for.
Indeed. Unfortunately, we'll have to leave it there. What are your guys' thoughts? Maybe you like it because of the lower prices. Maybe you're having issues at your broker as a result. Let us know what you guys are experiencing out there. We want to hear from you guys. Meanwhile, we have to keep on rolling into our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. Of course, macro has some pretty dubious stuff in the air, so let's look really quickly here. I touched on at the top of the show what is still to pop off here this week from a micro perspective. Amazon after the bell today, Levi's, Amgen, tomorrow Caterpillar, easy for me to say, ExxonMobil, Honeywell, Chevron, a lot of energy names popping off tomorrow. That should be interesting to see how that performs as well. So still a lot of big names yet to perform. Then, of course, next week we kick it all off again. So if you like to just focus on the micro in these troubling times, there is a lot for you to sink your teeth into. Let's go back around the horn. Let's start with Uncle Mike, sir. What are you watching for the rest of this week into the weekend?
Well, I think mostly macro as well as seeing if we can hold certain levels. I want to see if we can stay positive on the year, which we are right now in the S&P 500. I think that is always a key number. The fact that if we can end January on a positive note, then we're ahead 1% or 2% on the year, and we're in the end of January. It's not a bad spot to be.
There you go. Uncle Mike says it's not a bad spot to be. Mr. Rock Lobster, are you quite as optimistic as Uncle Mike, sir, or are you the diehard, cynical Maine contrarian, sir?
You mean the crusty old Mainer? Is that what you're trying to call me? Crusty old Mainer?
Something like that.
The market has pretty much shaken off everything I could see right now. It looks like it wants to continue to do the same. We're starting to see a little bit lower prices, though. Are we going to shake off this whole virus thing? I think there could be at least just, I think the Twitter and algo effect on, how much does China slow down until they kind of get this? Is it a week? Is it a month? So just a question of right now, at least, how difficult is it to discount what's going on? I don't think we got that answer quite yet. Just the way VIX is looking, and kind of where vol is, it looks like I think it's unsettled question at this point, to be perfectly honest. So vol is it looks like the way the vol traders are kind of uncertain. They're not really pointing in a direction. So usually those guys are pretty smart. Or also don't forget that's what everybody looks at. So, and that's what I'm looking at. That's it. I think right now that's just dominating all the short-term movement. But like the rest of the fundamentals looked, pretty decent up until last Monday. Or what was it, Wednesday last week.
All right, listeners. That music means we've come to the end of an epic journey through the world of options. But if you're saying to yourself, hey, I wouldn't mind a little bit more in my old air canals, well, stay tuned. We're going to pump some more in. If you're listening live, we'll get some fun stuff in between, maybe some Disney flies and some other fun stuff cooking over there. And then we'll be back in exactly half an hour. I believe I have Sean joining me in studio. I'll have some oil market makers joining us to talk all things craziness going on in rates and WTI and crude, all the fun stuff over there in TWIFO land, answering your questions as well. So I'll be back in exactly half an hour. Otherwise, if you're listening after the fact, just hit next on your device of choice. Head on over there. VVIX tomorrow, 1 p.m. Central, and we'll kick it all off again on Monday. But before we go, let's go back around the horn, check in with everybody. Let's start with Uncle Mike, sir. Uncle Mike, if I can just, I'm tired. I'm scared of these markets. I need someone to hold my hand in these tumultuous times. Where should I go? What should I do?
I have a hand-holding service. I'm AKA a financial advisor, and I love working with my clients. Been doing this for over 10 years now as an independent. Would love to have a conversation with anyone. Feel free to visit my website, stcharleswealth.com, and click on the Fox. Nothing will happen, but if you click on Contact Us, you'll find out how to contact me, stcharleswealth.com.
If we keep clicking on it collectively, listeners, we can make something happen. stcharleswealth.com. Click on the Fox. Make him put something cool there. That's my mission. 2020. All right. And Mr. Rock Lobster, if I come to the option pit, if I click on what used to be that crazy video man on your homepage, he's not there anymore. What will I find, sir? I missed that guy.
The video man. We should bring him back.
I missed that guy.
If you want to learn how to trade options and to be able to manage any market, this market, and learn how to trade more like a liquidity provider professional, a little less directional, a little more vol, we're the place. We do a pretty good job of it. Our pro chat room, we have ideas, things all day long, literally. So come over, learn to be a pro option trader, and that's what we do. So come on to optionpit.com, check it out. We can check out my cool vol trading club. And when markets are like this, you're going to learn how to deal with it. So there you go.
There you go. Check out the club. They have snazzy jackets and a cool secret clubhouse with a secret passage and everything. Optionpit.com is the place to go. And on behalf of the Rock Lobster and Uncle Mike and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for sending in questions. Keep them coming, listening live, all the good stuff that you guys do. And we'll see you back here in half an hour for TWIFO. And then, of course, back here tomorrow, 1 p.m. Central, for Vol Views, and we kick it off again on Monday with more of the Option Block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at MIXLR.com/options-insider. That's MIXLR.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.